Hello everyone and welcome to this video. In today's video, I would like to talk about two stocks that are providing me with a great long-term investment opportunity and why I am bullish on the long-term potential of these two companies. Alright, so let's get started. So, the first stock is Welspun Corp Limited. Welspun Corp Limited is the second largest manufacturer of large diameter pipes in the world based in Mumbai, Maharashtra, which is engaged in the business of production and coating of submerged ARC welded pipes, hot rolled steel plates and coils, and power generation. Welspun Corp manufactures pipeline infrastructure for some of the biggest petroleum companies in the world like Saudi Aramco, Shell, Total, Chevron, ExxonMobil, TransCanada, Energy Transfer, and many more around the world. And some of its key projects in recent times are longest pipeline in the United States, deepest pipeline in Mexico, heaviest pipeline in the Middle East, and highest pipeline in Peru. And if you see region-wise revenue breakup for the company clocked sales of 9,957 CR in the fiscal year 20, of which 39% came from India itself, 33% from the United States, and 28% from Saudi Arabia. Welspun Corp is a small cap company with a market cap of 3,808 CR. The stock is providing a good dividend yield of 3.43%, which I think is very solid. The company has delivered a good profit growth of 34.73% CAGR over the last 5 years, which is again very good. The company has reduced its debt. The stock is trading at 1 time its book value. But on the other side, if you see, the company has a low return on equity of 12.56% for the last 3 years. But considering its current return on equity of 16.1% is fair value with a very attractive valuation with a 1 price to its book value. So I strongly believe that this company is providing with a great long-term investment opportunity with its growing profits every year, reducing its borrowings, and it has a free cash flow of 414 CR, which indicates that a company's liquid assets are increasing. The current price is trading below its intrinsic value, so it's a good opportunity to invest in this company right now. Its sector PE is 24.65, so considering its current PE, I believe the company has a good chance of expansion in the coming future as well. And what I love about this stock is that the stock is not in the overbought zone, so this is a good time to invest in this company. For this recent quarter, the company reported a net profit of 97.47 CR, down by 55.4% from last quarter's net profit of 218.72 CR, but up over 80% from last year's same quarter net profit of 51.89 CR. And according to a recent article from the Economic Times, Chairman B.K. Goenka gave his statement by saying that their performance has been stable despite the second wave of the COVID-19 pandemic. Demand is expected to recover, supported by the government's thrust on creating water supply and gas pipeline infrastructure. They have built a solid foundation with a strong cash reserves, ESG initiative, and business diversification plans, and they are confident about their future growth prospects as well. And the most important part here is that the current global order book of the company stands at 487 kilometric tons, which is valued at 4,500 CR, which is a very good sign again. And here is a few more investment checklists to consider. The company has a low probability of default in the next 12 months, satisfactory performance in quality checks, among the top performers in growth score. Now let's look at the shareholding pattern of the company. So as of June 2021, promoters held a 50.01% stake in the company, while FIS held 11.71%, DIS 8.02%, and public 30.26%. So again, in my opinion, I think that this is providing with a great long-term investment opportunity. And with all being said, before we move on to the second stock, I would like to share one last piece of information about the company, and that is insiders' data. Insiders seem to agree as well, and they have been consistently buying the shares of this company Insiders actually seem to only buy shares of Welspun Corp, and I haven't seen them selling any of their shares at all in the past year. But alright, now let's move on to the second stock, and this one is BEL, Bharat Electronics Limited. BEL is an Indian government-owned aerospace and defense electronics company. It manufactures state-of-the-art electronic products and systems for the Army, Navy and the Air Force. BEL is one of 9 PSUs under the Ministry of Defense of India. The company's principal products include weapon systems, radar, fire control systems, and etc. BEL is a mid-cap company with a market cap of 48,768 crore. The stock PE is 23.6, the return on equity is 19.9, and return on capital employed is 27.9. So all of these numbers are considered a very good sign for a growth company. Company has also reduced its debt and now it's almost debt-free company. Stock is providing a good dividend yield of 2%, which I think is very decent, and company's revenue and its profit margin have been growing over the past few years. If we see total revenue generated in the fiscal year 2018, 10,596 crore, then in 2019 it was 12,237 crore, then in 2020 it was 13,067 crore, and in the fiscal year 2021 it is sitting right at 14,233 crore. And this is the type of growth for any company that I love to see and invest my money into. And the same pattern goes for their net income as well, from 1,431 crore in the fiscal year 2018 to 2,098 crore in 2021. And if we look at cash flow for the business, it has continued increasing. In the fiscal year 2018, it was negative 1,493 crore, then in 2019, 784 crore, then 1,823 crore in 2020, and for the fiscal year 2021 it is sitting right at 4,623 crore. So this right here suggests to me that BEL is providing with great long-term investment opportunity with its growing revenue and profits every year, reducing its borrowings, and it has a very healthy free cash flow. Its sector PE is 40.07, so considering its current PE of 23.23, I believe the company has a good chance of expansion in the future. And the company is not in the overbought zone and has no red flags at the moment, so this is a good time to invest in this company. And according to analysts, the company is expected to give a revenue growth of 15.16% for the next year, which is more than last 3 years CAGR revenue growth of 10.34%. And according to Ticker Tape, here are a few more investment checklists to consider, like the company has a low probability of default in the next 12 months, among the top performers in quality checks, satisfactory performance in growth score. So again, in my opinion, I believe that this is providing me with a great long-term investment opportunity, and the growth will only continue in the future for the company as the numbers speak for itself. Alright, so that's going to wrap up the video everyone, and if you enjoyed this video, then please remember to leave a like on it, and it really helps up my channel and I really appreciate it. Thank you all so much for watching, and I hope to see you all again in my next video. Have a good day.